it? Well, good afternoon and good morning. We are just waiting a couple of moments for the attendees to come in. It's going to take a little while because we've got over nearly 400 people registered. Okay, the counting is slowing down a little bit now, so I will start. As I said earlier, good afternoon, those of you who are watching in the Western Hemisphere, and good morning, those of you. Those of you. Good morning, those of you who are in the Eastern Hemisphere, and good afternoon and good evening, those of you. Good morning. I really should have practiced this. I do beg your pardon. Good morning, those of you in the Western Hemisphere, and good afternoon, good evening, those of you in the Eastern Hemisphere. We have nearly 400 people registered for this webinar. It's concentrating on two areas today. Firstly, there is a Commission working document or consultation document, which is published on the ETOA website. If you want to look at the real thing, so to speak, it's on the tax and tourism part of the ETOA website. It was published in October, and it really concentrates on three areas of tourism taxation. One is the tour operators margin scheme, which we're going to be discussing in detail in a minute. The other one is VAT on passenger transport, which is obviously very relevant for a number of our players, but we're not going to be covering, nor are we going to be covering the third area of that consultation document, which is to do the taxation on the supply of goods. Particularly when it applies to duty-free sales, which they're questioning, and also the VAT rebate scheme on retail exports, which is the ability of non-EU citizens to reclaim their VAT on shopping whilst in the European Union. Those of you who have an opinion on this, and I imagine many of you do on these latter points, please let us know. We need to make a submission really in the next 2-3 days. But the main body of what we're looking at is going to be the treatment of TOMs in this consultation document. And we will also emphatically, in the latter half of this webinar, be looking at the current situation governing the changes which are impending about the application of VAT on sales of German holiday goods. With that in mind, I'm delighted to be joined by David Bennett, our long-time VAT expert, very much the doyen of tour operators margin scheme matters within the European Union. David won't thank me for this, but when the last VAT consultation document or survey was done, the European Commission insisted to one of the big four accountants who were preparing the document that they had David on side. So even amongst the European Commission, who are not necessarily our allies in these areas, they recognize David as the leading exponent in this field. So with that minor puff, I'm going to hand you over to David to lead us through his presentation. David, over to you.
Okay, well, thank you, Tom, for those very kind words. Oh, let's see, where are we? Okay, so thank you. So as Tom has said, we're going to be looking at three areas really this afternoon. So the latest really in a long line of discussions on what the European Commission is planning to do with TOMs. I know we have a number of people on the call today who are probably not familiar with what the current TOMs is. So when we get to that part of the presentation, I will certainly say a few introductory words on what the TOMs is all about, and then look at how the Commission is talking about changing the rules and what the implications of that are. I also want to say a few words on the taxation of platforms. In fact, that's where I'm going to start in just a moment. And then, as Tom has said, we will leave time for a proper look at the current position in Germany. We've had quite a few questions submitted in advance. I will endeavour to cover all of those during the relevant section of the presentation, but there will be further time at the end for any further questions that I'm sure people will have. So, platforms. So what is this all about? Well, we're actually very close to the date on which the Commission will publish legislative proposals to introduce new EU-wide VAT rules for the taxation of services of certain types provided via online platforms. There have already been quite a few papers published on this subject, so we've got a good idea what is likely to be included. And I think the key proposal will be the introduction of what the Commission refers to as a deemed supplier regime. That is simply a way of saying that the platform will become the deemed vendor of the services mediated via that platform, and that the platform will become responsible to pay the VAT due on those services in any situation in which the service provider itself does not otherwise pay the VAT. A bit more detail to follow in a moment, but a very important aspect of this is that it applies to services performed within the EU, regardless of the location of the platform. So an obligation to pay VAT within the EU will apply just as much to a US platform, for example, as it would do to a platform located and managed within the EU. So it is an attempt in this area on the part of the Commission, certainly to raise more revenue, but also to achieve a greater equality of outcome between hotels, VAT-registered hotels on the one hand, and smaller, maybe privately owned accommodation on the other, and also to ensure that platforms get no advantage wherever they might be located in the world. So a few more words on the deemed supplier regime. We think, bear in mind, there are no proposals for another 3 weeks or so, but it seems very likely that the platform rules deemed supplier regime will apply to the provision online of short-term accommodation, so mainly holiday accommodation, but not necessarily limited to holiday, and passenger transport, provided that the service in principle is subject to VAT in the EU. Now, essentially, in the case of accommodation, that simply means that the property in which the accommodation is provided is physically located in the EU. In the case of passenger transport, where the transport physically happens within the EU. Makes no difference whether the owner of the accommodation or the provider of the transport is an EU person or not. The key is, where is the accommodation, or where does the transport take place? And again, just to recap, it doesn't make any difference where the platform itself is located. So if the service provider, the property owner, for example, does not account for VAT on the sale, and that was a very typical situation, because very often, if we're talking about villa holiday accommodation, for example, clearly many of the owners, private individuals, are not VAT registered. But there are other circumstances as well. So we need to wait to see what the detail of the proposal is in this respect. But broadly speaking, we expect it to apply in any situation where the provider does not account for VAT. And the third condition is that the platform does not sell in its own name. So the platform mediates the supply of accommodation or transport from the provider of the service to the consumer. Again, there's quite a lot, I suspect, of detail to follow on what that actually means. But these 3 points, I think, capture at a fairly high level what the deemed supplier regime is intended to achieve. So where the conditions are satisfied, the platform, regardless of where in the world it operates, will be required to pay VAT on the full selling price. So let's say you are a letting agency for holiday accommodation, and let's say the accommodation is solely located in Italy. The idea is that as a platform, you would be required to understand the status of the property owner, the provider of the accommodation. If you are satisfied that that person is VAT registered and will pay the VAT on the transaction, then as the platform, you will not be required to pay the VAT as well. But in any other situation, you will be required. And you will pay it at the Italian rate, which is 10%, and you will pay it probably using a facility commonly referred to as the one-stop shop to the Italian authorities, and you have a legal obligation to do this. Now, that's a very, very, very high level view of what the platform rules will be. To recap, we're expecting the proposal on the 7th of December, so 3 weeks roughly. There will be lots of practical issues to consider once we get those proposals, and I'm sure that we will be writing an analysis of what we think the proposals mean, etc., shortly after their publication. Happy to take questions, etc., when we get to the end on the deemed supplier regime. But without further ado, let's move on.
David, can I just interrupt there just for 1 second? Just to emphasize one point, which is that the Commission are doing this, I understand, because they're very worried that people are distributing accommodation which is untaxed, by which I mean it's almost Airbnb style accommodation where people are renting out their rooms, and these are being distributed alongside accommodation which is being taxed, and they feel there is a gross unfairness in this, and this is why they're acting. I think it's quite important for people to grasp that. They think field, as they would refer to it in this area. Just secondly, before we go on, there is a question and answer facility, which I should have pointed out at the beginning, which is why I've interrupted you, David. I beg your pardon. Do use that Q&A facility. We've got a number of questions that many of you have kindly posted before the event. Do use that Q&A facility. It's down there. We've also posted the link to the Commission discussion document, which David is going to be referring to. So if you want to look at it, it's already posted up in the Q&A for you to see. Thank you very much, David. Over to you. Okay, thanks, Tom. So Toms, as I mentioned in the introduction, I guess there's probably quite a few of you on this webinar who don't really know what Toms is. So a few words about the scheme. Toms is the Tour Operators Margin Scheme. It's an EU scheme applied compulsorily in many circumstances. Its aim is to simplify the payment of VAT by businesses selling travel. It's old legislation. It's 45 years old now. It's outdated. It needs to be modernized. It also only applies to tour operators which are located within the EU. It is therefore often blamed for an economic disadvantage suffered by EU-based travel suppliers. So we will see that the Commission has a number of aims, but key within their work is a desire to make sure that non-EU providers of EU travel services, at least in certain circumstances, which we will come on to, are brought within the scope
of EU VAT. So there are parallels here between the TOMS rules and the platform rules, as Tom rightly interjected to say. There is a concern that via platform services are not being properly taxed. Measures to put that right, as the Commission would see it, but equally within TOMS, maybe it's a lesser issue, but nevertheless a concern that the scheme is unduly favouring certain businesses. So that's TOMS. So what is actually going on? Well, the Commission has been looking at TOMS for 20 years, has never managed to find a set of new rules that would be to the satisfaction of the member states. So they've never managed to change the rules, but the issue has never gone away. And we are now seeing by far and away the most thorough, concerted effort on the part of the Commission finally to get some changes through in this way. The Commission has appointed a firm of or a consortium of contractors to carry out an economic study, not just on TOMS, as we will see in a moment, but generally on the rules as they apply at the moment in the travel and tourism sectors, and to look for ways in which the rules might be simplified and modernized, and to try and quantify in an economic sense the benefits, costs, risks, etc., of various different approaches. The work is ongoing. We're actually probably fairly close to the adoption of the final report. Really what we're talking about today is a reaction to the contractor's interim report that was presented at the end of August. The document, which I believe you've all been sent a link to, it's on the ETOA website, was published by the Commission on the 19th of October. It's really in the form of a briefing paper for a meeting that took place on the 26th of October. What I'm going to be talking about over the coming 10 or 15 minutes is really the content of that paper of the 19th, plus the discussions with the Commission on the 26th. The Commission is still very much in the process of inviting comments. I know that various bodies will be making representations within the next 2 or 3 weeks. So please, everybody on this webinar today, please do feel that you have a voice in this. Any of you are perfectly at liberty to write to the Commission with your views, or if you prefer, you can make your views known to me or to Tom or to any other trade association, and there's a decent chance it will all be fed in to the Commission's work. Tom has already mentioned the 3 areas that the current economic study is looking at, but just to recap, they are the operation of TOMS, the rules for the taxation of passenger transport within the EU, and that primarily covers the circumstance or the place where VAT should be paid on intra-EU passenger transport, and then the exemption for goods sold to non-EU travellers, so duty-free and VAT refunds to third country visitors to the EU. The most recent document talks about the objectives of all of this work, basically to, as it says there, to address the distortions arising from the current rules, and I think that's the key aspect. The contractors have clearly identified that distortions exist. They've got figures to show the size. The work that I did with KPMG back in 2017 that Tom has already referred to, similarly, didn't really have quite the same purpose as the current work. But even so, we identified, I think, 5 areas from memory where the TOMS rules were creating distortions. Again, I won't read this whole thing out. You will all have the slides afterwards. If you're interested, you can read this, or you can read it all for yourself in the Commission's document. But I just wanted to highlight 2 things really. Firstly, the rules are not fit for purpose, the current rules, and that the work carried out has identified a need to reconsider the rules in a, quote, comprehensive manner. So I think everything is pointing towards a set of proposals next year from the Commission that will really be quite far-reaching and will be a radical overhaul of the way in which TOMS operates. Now, on that, the Commission is looking at 4 different areas, and then there are quite a few points under each of these 4, as we will see in a moment. But the 4 headings are the scope of TOMS. So broadly speaking, when does TOMS apply? The rules which govern the place where the TOMS VAT is payable. And that is of crucial importance to tour operators and similar everywhere, but particularly those located outside of the EU. We then look at various definitions, concepts, etc. within the scheme, and what the Commission is thinking of doing to change the scheme in that respect. And then probably the least contentious area is the nature of the TOMS calculation, i.e. the methodology by which the amount of TOMS VAT due is actually calculated. So the documentation and discussions suggest that 4 areas under the heading of the scope of TOMS are under consideration. Now, these all reflect areas where practice varies considerably at the moment between the member states. So to a large extent, what the Commission is looking to do here is to make it clear what should or must be the proper treatment in each of these areas, with the intention of ensuring that the member states apply VAT in the same way in each of these areas. But it is also a means by which some of the defects of the scheme might be rectified. So the first point under consideration is the exclusion of wholesale supplies. This has been a problem area within the scheme for decades. So one of the points under consideration is basically, well, let's resolve the problems of wholesale supplies by simply taking them out of the scheme. Now, a wholesale supply is one sold to a business customer for resale by that customer. Member states, the UK as well as an ex-member state, that have built up practices over many years as to what to do with wholesale supplies. Some member states look on them favourably, I think it's fair to say, others less so. The aim here is to say, well, how can we best ensure that they are treated equally everywhere? And one possibility is to simply say, well, we'll take them out of TOMS across the board. That's not to say they wouldn't be subject to VAT. They would be subject to VAT under what we usually refer to as normal VAT. But what on earth does normal VAT mean in this context? There are at least 3 different ways of approaching that question, and that is a point that is going to be one of the key issues to be discussed with the Commission over the next month or 2. Most people, I think, do not favour the exclusion of wholesale supplies compulsorily. I'd be surprised if we end up in that situation. A far more likely scenario, I think, is option 2, which would see B2B supplies of all types fall within the scheme, potentially, but with an option on a transaction by transaction basis by which the vendor or the supplier can opt out of TOMS and apply normal VAT. Now, again, the same point as before, what is normal VAT in this context will be all important. But I think the most important point there is the option would introduce considerable flexibility that simply doesn't exist at the moment, and would be to the advantage of really all forms of B2B travel supply. Thirdly, similar vein perhaps to point one, MICE, meetings, incentive, conferences and events. The possibility here is also that this category of business might be compulsorily excluded from MICE. Now, sorry, from TOMS. I think it's far more likely that this area will be excluded compared to wholesale supplies. Problematic again, how do you define MICE? I guess that's maybe not the biggest of issues, but how do you determine the application of normal VAT to MICE? The member states are simply not agreed on that at the moment, so there'd have to be some give and take by the member states to reach agreement in that area. Interesting point on number 4. It's often complained that a business operates primarily in such a way that TOMS is inapplicable, but it gets caught up in the complexity of the scheme, even if only a very small part of what it does qualifies as a TOMS supply. So to help resolve that problem, there seems to be a decent likelihood that the Commission and the Member States will agree to a de minimis, so perhaps 5%, saying that if TOMS represents less than 5% of your turnover, you can basically disregard it. And again, pay VAT on a normal basis. That would be optional. I think you could opt to include TOMS on low value TOMS turnover if you wanted to. So 4 specific changes, each of which, certainly options 1, 2 and 3 would be very far reaching. But the Commission document does make it clear that they're not committed to change at all in this area, and maintaining the status quo is still a possibility. Now, frankly, I think it's extremely unlikely that we will end up by maintaining the status quo. I think the option of a B2B, the introduction of an option for B2B is highly likely. That's the most likely outcome, I think, out of those 4. Onto the place of supply. Now, this is the point that I mentioned of being of importance really to all suppliers of EU travel services, regardless of where you are located, but it's of particular interest to those located outside of the EU. Now, we will come on to Germany later, but essentially what Germany is doing is reacting to the confusion under EU law in this area at the moment. It is not clear at all what the status of a tour operator or similar located outside the EU but selling EU travel should be. Most member states, including Germany, have taken the view that a non-EU tour operator is not subject to EU VAT. The margin is VAT free. So in other words, TOMS effectively applies, but there's no tax payable because there's no EU place of business at which to pay it. But Germany, as we will see, has reacted to that by saying, well, there should be an alternative way in which the VAT is paid. What the Commission and the Member States want to do is to legislate to bring a very much more, a fairer and much more business-friendly approach to achieve taxation in the right circumstances without going to the lengths that Germany is planning to. So the document suggests that 5 approaches in this area are possible. Again, maintain the status quo is number 1. So the rules remain as they are at the moment. So importantly for non-EU suppliers, the margin would remain untaxed, but under this heading, the risk would be that Germany and indeed Croatia, which has done already something very similar, would look for payment of VAT outside of TOMS. I really don't think that maintaining the status quo is a good idea, and I don't think it will happen. Number 2, however, is a very much more likely outcome. This would see the place of supply, the place of taxation of the margin change so that it becomes the place of the traveller's residence. So the place of travel itself is not the test, although VAT would only apply if the travel is somewhere within the EU, but VAT would be due on the margin made on that EU travel, not where the tour operator is based or where the travel takes place, but where the traveller is resident. So if the traveller lives within the EU, VAT is due on the margin and it is payable in the member state in which the customer lives. But hugely importantly, if the customer lives outside of the EU, the effect of that rule would be non-taxation, quite legitimately, of the margin. So this rule would have the effect of ensuring that a non-EU tour operator only became subject to EU VAT if two conditions are satisfied. Firstly, the travel takes place within the EU, and the person to whom the travel is sold lives within the EU. So a US tour operator on this basis would have absolutely no obligation to pay EU VAT on its margin or in its selling price whenever it is selling to customers resident outside of the EU. So the problems that a lot of people are aware of with the Germany proposals would be replaced by this rule with non-taxation. Number three, again, would apply to tour operators anywhere in the world. This is a far less favourable suggestion. This would tax the margin in the member states in which the travel takes place. Tour operators, regardless of their place of business, would be liable to pay VAT on the margin made on all forms of travel enjoyed within the EU. And it would be necessary to identify how much margin was made in each of those member states of destination. So EU or non-EU tour operators, if they sold holidays to or enjoyed in, shall we say, 4 member states, would effectively pay margin VAT in those 4 member states and would need to have processes in place to identify how much of the total margin should be attributed to the 4 destinations. It's not a business-friendly approach. It would mean more revenue. I quite accept more revenue for the member states than option 2, but I don't think it has much in its favour. Number 4 is quite possibly the one that we will end up with. Importantly for non-EU, it fixes the place of taxation as the traveller's place of residence. So third country tour operators see the benefit and the simplification inherent in option 2. But EU suppliers can continue with the current payment of VAT wholly in the member state in which they are established. Now, number 4 is popular because it achieves a good outcome for non-EU tour operators, but it allows EU tour operators to continue with the current arrangements which they're familiar with, and therefore won't need to understand where their customer is located, and won't need to change accounting systems, etc., to accommodate a change in the rules. Number 5 again is a hybrid. This would allow EU suppliers to continue paying VAT as they do at the moment by reference solely to their member state of establishment. But for third country operators, it would introduce number 3. So payment of VAT separately on the margin achieved in different destinations. So really not a good outcome for non-EU operators. I don't think it's likely that number 5 is where we will end up with. I think most of the indications are that we will end up with either 2 or 4, either of which I think is a business-friendly outcome. Now, there's a lot of stuff in here which really needs to be considered in real detail. Obviously, we don't have time for that this afternoon, but a lot of what the Commission is talking about in this section is really quite fundamental to the way in which the scheme operates. TOMS is only applicable to somebody who sells travel as a principal or as an undisclosed agent, i.e. they must deal with the customer in their own name and not in a disclosed agency manner. But what that actually means is vague, and member states do approach it differently. So the suggestion here is that there will be a list of what the Commission is referring to as presumptive behaviours. So if you operate in certain ways listed, the presumption will be that you need to be treated as a principal. And I think a typical example there would be if you set the selling price, it will be presumed for this purpose that you sell in your own name, you're a principal, and therefore that the TOMS should apply to you. Number 2, TOMS is a scheme for the provision of travel facilities. So the meaning of travel facilities is key, but is not currently defined, which is a real weakness with the current scheme. The Commission is looking at 2 possibilities, it seems, but they would both have the effect of limiting TOMS to packages or bundles of services, as the document describes them. So single items would be excluded on this basis, which would be a big change from the current arrangement. And point 3 confirms that. Single items would fall outside of the scheme and normal VAT would apply, except possibly that an approach under consideration is that a single item comprising accommodation would possibly be within the scheme. Now, this is important. Let's say, well, if you're an EU tour operator, if the scheme is limited to bundles, packages, and your business includes the sale of standalone accommodation, for example, you're still subject to VAT, but the normal VAT approach for accommodation would then require you to have a VAT registration in the member state in which the accommodation is located. So you would lose the simplification of TOMS for such a standalone supply. And in fact, it would be the same for a third country, a non-EU travel supplier, even with the favourable place of taxation of the customer approach, as we looked at on the previous slide. That would be of no help to you if you were selling standalone supplies of accommodation or indeed passenger transport, unless those services are considered to fall within the scope of TOMS. And what the Commission is looking at here would exclude such standalone supplies. Now, I think the logic for this is to try and achieve equality of treatment between a person selling travel in their own name, a tour operator, if you like, and a platform. So if a platform is subject to pay VAT under the deemed supplier regime on the full value of accommodation, it could be argued to be unfair that the tour operator selling accommodation in a slightly different contractual way would only be subject to VAT on the margin. So I think that rule might be an attempt to achieve equality between tour operators and platforms, but it's not clear. But even if that is the logic, I think it's a retrograde step to exclude single items, and there will be representations made undoubtedly on that point. Number 4 is really just a repetition of something that came up under the scope, which is consideration of the exclusion of MICE. So event organization in its various forms would specifically be said not to constitute a travel facility, and therefore it would fall outside of the scheme. I won't say very much at all on mixed supplies. This is really the situation where you have a combination in a package of services that qualify for TOMS and services which don't. So it's just looking at various accounting techniques really to put the proper value on the two parts of the transaction. And finally, how do you actually do your TOMS calculation? So several years ago, the European Court ruled that there was nothing in the scheme that would allow for any approach other than to separately calculate the VAT for each transaction. Each transaction here could be several receipts of payment, and therefore you end up identifying a perceived margin on every payment on account. A very, very legalistic approach. I don't think anywhere really does it in quite that way, at least very few places. And it's generally accepted that an alternative needs to be found. For those of you familiar with TOMS in the UK, you will know that the approach here is to do a single TOMS calculation at the end of each financial year. And to calculate the VAT by reference to departure date. And that's exactly what is proposed there in point number 2. So interestingly, it appears as though the contractors and the Commission quite like the idea of the adoption of an approach which is very similar to the UK approach. And number 3 is simply to say, well, we've got 2 approaches potentially, and you can choose whichever one you want to do. That pretty much finishes the prepared stuff on TOMS, but as I said, we do have some questions. So the first question on TOMS, what are the immediate impacts to incoming or operators in non-EU or EU candidate countries? Well, I referred, I think the main issue here is the place of supply or place of taxation. So somebody in an EU candidate country, for as long as it remains a candidate country, or anyone outside Europe, for example, would simply only pay VAT on the margin if they sell EU travel to an EU resident consumer. In other circumstances, EU law would not require the payment of VAT. But just to recap, if standalone services are excluded from TOMS, that would significantly reduce the benefit of that place of taxation rule for tour operators located outside of the EU. There's a question as well. I appreciate this could apply to Germany, but it's Tom's question as well. Are any rules foreseen regarding cancellation and postponement conditions? Well, option 2 on the screen at the moment is relevant. If you calculate VAT by reference to the departure date, in effect, you must get relief for cancellations, because for the obvious reason that there's never a departure. Now, that's the accepted UK position. What I can't say is whether that point specifically is being considered by the Commission and its contractors, but it would seem to me a decent chance at the very least that if they introduce the rule as summarised in 2, that there would be an automatic relief effectively from the payment of VAT on cancellations. And then there was a question, final question, I think, on TOMS, which to summarise, I think, what does what do the likely TOMS changes mean for the UK? the UK TOMS rules specifically, but also for Germany. If we deal with Germany first, if these rules are adopted in the way described, they would replace the German requirement for third country tour operators to be registered and pay German VAT. So it would be good. If it happened, it would also provide the risk or protect against the risk of registration obligations in future in other member states. Final point on the UK. Very, very soon after the referendum in 2016, HMRC said that they would need to monitor what the EU did in terms of its rules in areas such as travel, to make sure that the UK rules were not the same, but not inconsistent with the EU rules. So I think it is likely that HMRC would carry out a review and quite possibly change the UK rules in some way to be consistent with the objectives of the EU rules. So that's Tom's opportunity for questions and stuff once we've looked at Germany.
David, can I just interrupt very, very quickly? I just want to emphasize we've got 11 questions which have been posted. I think what we'll do is we'll whilst a lot of these questions refer to David's presentation so far, I think we'll go straight on to look at Germany immediately now, and then go back to the questions raised, because I want to cover Germany, and so we've got a sort of an idea of the shape of the discussion, if that makes sense. And I know a lot of you are here because of the changes in the German laws. David.
Yeah, thank you, Tom. So I said during the stuff a few moments ago on Tom's that really the German position is a reaction to the confusion of the existing EU rules, and they recognize a desire to try to extract VAT on German travel and to ensure that German businesses are not at a competitive disadvantage. Now, there's a bit of a ham-fisted way, perhaps, of trying to achieve that, but I think the objective here is at least understandable. We've done webinars that many of you I know have joined before on what the German intentions here are, but it does no harm to recap. The plan is that from the 1st of January next year, non-EU suppliers of German travel will be considered to fall outside of TOMS, and that the consequence will be that they should be required to pay German VAT on all travel services with a German place of supply. So essentially that means all accommodation, passenger transport, car hire, etc., that actually happens within Germany. But we are still desperately short of guidance on what that actually means in practice. As I say in one of my points there, we're 7 weeks or so away now from the introduction. We still don't know if it will happen at all. And if it does happen, we really don't know what is expected of non-EU suppliers of German travel. And that is frankly an unacceptable position. I think German advisors are still saying, well, wait and see. We don't know what the situation would be. It would still be premature to obtain a German registration. But at least as big an issue is, of course, the need to make accounting changes, to understand how much VAT might be payable in Germany in different scenarios, what it means in terms of the recovery of German input VAT. And we really need to consider here the anticipated distinction between B2C and B2B supplies of travel. If you're a B2C supplier, then I think the likelihood is that you will register in Germany. You will recover whatever VAT charged to you on your purchase of German services, and you will charge and pay German output VAT on the value of those German services, recognizing the rate to be applied in Germany will be either 7% or 19%, I think, depending on the nature of the service. But for B2B suppliers, it's expected to be different. Here, not across the board, as I understand it, but for many forms of B2B service, the onus will be on the customer to register in Germany and to pay VAT on its purchase of untaxed services. So let's think about what that could mean in a typical scenario. So let's say that a UK tour operator purchases accommodation and other German services with local German VAT and sells those services either individually or as a package to a tour operator in the US, and the US sells those services on a B2C basis to American travelers. The UK company is a B2B supplier, will therefore, as I understand it, be entitled to make a claim for repayment of its German input VAT and can raise a sales invoice to its US client with no VAT. The onus falls on the US tour operator then to register in Germany and to pay the VAT due on its purchase of the services from the UK tour operator, and then also to pay VAT on the B2C sale to its customer. So you end up with a tour of Germany ultimately sold to US travelers, creating a German tax revenue. Now, contrast that with the plans under Tom's, and assuming the place of taxation becomes the place of residence, the US tour operator in future would have absolutely no liability. So it could be, and as I said, we still don't really know what's going to happen in Germany. But if it is as I've just described, that liability might exist for 2 or 3 years, and then the rules change, and the US tour operator essentially goes back to the position that it has had for many, many years. There is, however, very recently a suggestion. I'll hand back to Tom on this point in a moment, but a suggestion that the German rules from January might work in a very much more friendly way, which is that it would only be expected that VAT should be paid when the travel is within Germany and the customer is an EU resident person. So in that situation, in my example, the US tour operator selling to US citizens would be excused any obligation to pay German VAT. This is, I think, a little bit more than a rumor, but it's very, very far from being an agreed position. But it is an interesting and potentially beneficial development in this area. I understand that there is a meeting of the German Finance Ministry next week, at which that point potentially, and certainly more generally, the way in which VAT is to apply from the start of next year will be discussed. It is still possible. I think all advisors in Germany agree that it's still a possibility, that at the very least, Germany will defer all of this again, or conceivably even announce that they're dropping the intention altogether. So, we're 7 weeks away, but we really still, I'm afraid, don't know what is going to happen. So, Tom, at that point, if you could come back in and just say your bit on the most recent German news?
I think, I don't know, I think it's probably just worthwhile emphasizing the chaotic nature of the implementation of these regulations. You were quite right to stress that we simply don't know. My understanding from sources within the German finance ministry is they don't really know how it's going to work. Their attitude was, look, we're going to implement this law and we'll try and work out how to work it when we've implemented it. They recognize, and you didn't touch on this, I don't think, but they recognize there's a howling problem with non-EU intermediaries, tour operators based in the United States, for instance, buying services through German and EU wholesalers. And the German and EU wholesalers expected to both purchase tax-paid accommodation and services. They're expected to add a margin onto it and pay a tax on that margin under TOMS, and none of that tax is recoverable. And so the payment made by the American tour operator buying from an EU wholesaler, in theory, has a big double taxation liability. Not in theory, in practice, will have a big taxation liability. And the German tax authorities to this, which is a glaring fault in this scheme, is to say, well, we'll let the courts sort that out. It's very much at the moment one of, well, we appreciate this is going to cause chaos, but we'll sort it out when and if we're able to sort it out. And it's no good us saying this is unacceptable. That is the situation that we're facing at the moment. Now, in that situation, there is substantial external lobbying taking place. Our colleagues at ETOA have issued a very strongly worded press release involving quotations from ETOA as well, pointing out the flaws in the German scheme. We are mobilizing what influence we have within the European Parliament to raise the injustice of the German scheme, not least because it damages any EU wholesaler who sells German product. It also, frankly, damages any country next door to Germany that may be part of a pan-European tour, because if you're selling a multi-country itinerary which includes Germany, your obligations suddenly skyrocket, not so much in terms of monetary exposure, but in terms of bureaucratic exposure. If you include a German product, you would have to register for German VAT, and you would have to account for that, I believe, on a month-by-month basis. There is a long list of known unknowns in this area, which we've run through in the past, and I would guide those wanting a guided tour of the state of our ignorance to look at previous webinars on that front. The good news is that there is a rumor that Germany is, as David said, about to concede, if that's the right term, that these regulations should only apply to non-EU players, non-EU operators selling to EU citizens. And to a certain extent, that drives the main concern that the German tax authorities had, was that they were very worried that UK tour operators, after Brexit, would be able to sell German product or EU product to German citizens without paying proper taxation on the margin. And if they introduce that, only taxing or only introducing this new law on sales to EU citizens, then I think many of us would breathe a huge sigh of relief. But this is by no means certain. Very little is certain at the moment. Now, just to go to some of your questions, I know some of you posed some questions before, and I think you want to ask the first person. This is before the webinar. Asked you say that it is still possible that the policy may be reviewed, and I would like to know how probable the German authorities will review this new tax policy. All I know is that they are looking at it. It's a short answer. In terms of probability, logic would dictate that they row back on this. They're about to cause real mayhem if they go ahead. But we just can't be certain. I'm just looking at what can wholesalers and tour operators do with these plans, other than the obvious cliche, which is, hope for the best and prepare for the worst. I think, were I a tour operator, and I have not been a tour operator now for nearly a quarter of a century, so my opinion is slightly jaded, or experience is slightly jaded, I would certainly bide your time. It's going to be very, very painful if you have to implement this, but I think there is a good sporting chance that the situation will change before the end of December. But as David said, we are running out of time on this. Someone's asked what the expected immediate impacts to incoming operators in non-EU, EU candidate countries like the Western Balkans. David, do you think there's any impact on that beyond Croatia? I don't see any change in those areas, do you?
No. Sorry, which question in particular are you looking at, Tom?
I said the expected immediate impacts to incoming operators.
Yes.
In candidate
yeah, I already took that one as a Tom's question.
Yeah.
So I think I've answered that one. I think the German questions submitted in advance. Hopefully I've covered them, but well, either I've covered them during my part of the presentation, or Tom, you have. They tend to consider, I'm a non-EU supplier. What does it mean for me? And is there any end to the uncertainty yet? And I think we've largely dealt with that. We've got a number of questions, of course, on
I think there's
all aspects.
David, if I may interrupt, the one thing we didn't answer is, as a wholesaler, what do we need to show on our sales invoices to be compliant with the new German VAT rules?
Well, I think you would be required to include a statement to alert your business customer to the effect that they probably got a German obligation. So you wouldn't be charging VAT, at least in most circumstances, but you would be making a statement to tell your customer what their obligations are. That I think would be the likely situation.
But just out of interest, I don't think I don't know whether there's a formal requirement for this.
Well, again, I think there is in Germany. I think there is a formal requirement. I mean, that's nothing new. Really, what we're talking about here is an approach in Germany that, in fact, has existed for many, many years. And you often see it on river cruise invoices, for example, where a non-German provider of river cruise services in Germany is saying a certain proportion of the total invoiced value relates to Germany, and you should be registered and you should pay German VAT at 19% on this value. So I think it's really going to be a continuation of that type of approach that we can expect. Always, of course, subject to the big caveat that we just don't know that Germany's going to do this at all anyway. But if they do, then I suspect the answer to that question is that there will be an obligation to put information on the invoice to assist your business client to meet its German obligations.
Excellent. Okay. Just to take, what I'm going to do is look at the questions in reverse order, if I may, which is probably slightly unfair. But I want to cover Germany before we switch back to the earlier points. Will this issue apply to a US seller of German tours? I think the answer is yes.
Yes.
And so the tour operator is German. The US sells to their clients, mainly to US or Canadian clients. I think the tour operator itself is unlikely to be German if they're selling in the United States. I may be incorrect.
Unless that means a wholesale supplier.
I think we assume it's the wholesale supplier. Yeah, and the answer is it would apply to them. And in fact, there is danger of double taxation there.
Yep, absolutely. That's not a great model going forward.
If a tour operator included an air component that was just connecting in Germany, only German touch point was the connection, say, in Frankfurt, would this be included? What an interesting question, David, because that involves German transportation within Germany, does it?
I think that would be fine, because it's an international flight. So if you've simply got a connection in Frankfurt, then I don't think there would be a problem. I haven't considered that point specifically. If instead of it being a connection, it was a German domestic flight, that would be different, I think. But I think an international connection is fine.
A very good question. How is all of this enforceable on non-EU tour operators if they refuse to comply?
Well, yeah, depends where you are. I think there's a greater chance of it being enforceable in the UK, for example, because of the Brexit trade agreement that requires HMRC to assist EU tax authorities. Different in other countries, though, of course. I don't have an answer to that, other than to say a month or maybe 5 weeks ago, we had a meeting with the Commission on the platform rules, and somebody asked the question, how on earth are you going to enforce this? American, Chinese, etc. platforms? And the head of unit just said, well, that's not really our job. Our job is to come up with some technically coherent rules, and then the member state's job is to enforce. And I think probably the same holds true in this situation. So it's not a proper answer, but it did help to illustrate the Commission's thinking.
I just to illustrate, I mean, don't be overconfident that they can't do it. I think would be my earnest suggestion. Notice that there is technically a liability for tour operators to pay tax on the transportation that they use in Germany, and I have had instances of members finding their coach impounded because the German tax authorities felt that they hadn't paid the tax on the travel services within Germany. Just to reiterate, to explain it, even if you're running a coach store of your own within Germany, there is technically a liability to pay tax on the transport services enjoyed within Germany. And I don't know how many people are paying it, but the German tax authorities have occasionally found ways of making you pay. And so I wouldn't put it beyond them to be devising something similar in these circumstances.
Yeah,
how they can do so on one products. Sorry, David.
Yeah, the German authorities, maybe not surprisingly, tend to be very thorough. And there have been many examples over the years where UK companies have had a theoretical liability in Germany, which has been identified. The German tax authority, the Hanover Nord tax office, as it is for the UK, has written to a UK company to explain the basis of a probable German liability, and they keep on writing until they get a reply. And in many cases, that took quite a few years, but eventually they got what they wanted.
Expect sort of letters delivered by Harry Potter's owl on a regular basis. I think you can say we snowed under with them. Someone's asked what's the likely time frame for the implementation of the new EU rules on tolls.
So I think we're looking at proposals for new law maybe late next year. How long it takes from then, of course, depends very much on the attitude of the member states. It needs to be unanimous. There must be unanimity amongst the member states. And that's where these previous initiatives in this area have failed. But the Commission is being very much more thorough this time in keeping the member states, I think, on side during the initial discussions. They've been far more thorough in their preparation in terms of having external studies undertaken, etc., etc. And we understand that to a large extent on many of the points under consideration that the member states have already signalled their approval. So we don't know, it's difficult to give a date, but my best estimate is that the new rules could probably be in place by the start of 2026, possibly a bit earlier. but 2026 to me feels realistic.
Okay. I think one thing I would stress is that David, you've given a very thorough and interesting, that may colour people's impression of what's happening. I think when we look back at what is proposed under the discussion document, and be aware that this discussion document is there to explore all options. So not by no means any of these options are going to be implemented, but the idea is just to look at everything. We're coming at it and looking at it and reading that document of what makes sense from a business point of view. And undoubtedly, if you look at things like the place of supply options, judging it on the place of travelers' residence seems to be the most sensible one from the point of view of business and in terms of implementation. But as David has just pointed out, the Commission don't necessarily look at things like that. And I remember many years ago having a chat with them, and they say, Mr. Jenkins, you don't understand. We are the taxation unit. We are not the exemption from taxation unit. We are the taxation unit. And their job is to raise as much money as possible. And it's that line and that imperative which will be driving their thinking behind it. It's our job to try and persuade them that that's perhaps not the most sensible way of proceeding. I would also caution the fact that gaining unanimity in these areas is notoriously difficult. They may well be attempting now, because the people who vetoed the last substantial attempt to do a reform, which was in 2003, it's 20 years ago, David, was vetoed, but it was vetoed by the UK. And I think they may be confident that they can proceed without a UK veto hanging over them, but we'll find out. Anyway, that was the time frame. Just look at
so could it be? Yeah. Sorry. So on Germany, could it be retroactive? I think this is one of the situations we simply don't know, but I think the answer is yes, perhaps. I think well, certainly it's been explained to me by at least one German advisor that it is highly likely that the change would apply to travel within 2023. So sales made this year, but for travel next year could be subject to German VAT. So yes, in that sense, I think it could easily be retroactive, but that is one of the many issues still to be resolved.
Okay, if we now it's going back to the VAT. Sorry, somebody who posed a question earlier just wanted a clarification. The proposals that we've just been discussing on imminent changes on January the 1st of next year only apply to Germany or goods and services which are enjoyed, to use the jargon, in Germany. They don't apply to anywhere else in the EU, with the possible exception of Croatia, but maybe that's another discussion later on. Just to go back to the questions, if we get one of the options for the taxation depending on the place of residence of the customer, could we end up having to pay VAT in several countries for a single trip if we entertain customers resident in a number of EU countries?
Answer yes, you could. We have discussed simplifications in that area to try and avoid that happening, but the answer to the question is yes, it could be. One possibility is that, in recognition that this rule could be complicated in certain circumstances, that there could be a fallback of paying VAT in the member state in which the service is actually enjoyed as an alternative. So, for example, one area where this was discussed would be a cruise ship selling excursions. It could have often would have, of course, numerous nationalities on board, and it would be impractical to identify separate margins for customers in Spain, in France, in Italy, etc. And therefore, instead, VAT might be paid wholly on the margin in the member state in which the shore excursion takes place. But it's that sort of level of detail that will be discussed, I suspect, during the course of next year. don't think the Commission or the contractors, even publicly at least, have said anything to date on that particular point.
Right. What is so I'm just looking. What do you mean by a third country supplier? It's very
Sorry,
straightforward.
I think I probably dropped that term in a few times. I get so used to hearing Commission representatives talk about it. Sorry if it wasn't clear. Basically, any supplier located outside of the EU.
Okay, great. Something. All right. In the case of point of sale where a traveller is resident,
Place of supply, I think. Actually.
Place of supply. I do beg your pardon. Wow. Okay, thank you. My acronym got jumbled. I do beg your pardon. In case of place of supply where a traveller is resident, if EU residents travelling outside the EU, will it be 0% for the EU tour operator and standard rate of the countries of travellers' residence for non-EU tour operators?
Oh,
I think what they're saying is, I think it's 0% if you're selling within the EU, and these guys are interested in if it's a sale of a non-EU product outside the EU, the Commission aren't interested, I think. And if they're selling a non-EU product within the EU, again, they're not interested at the moment. It's effectively exempt. David, I think that's what the question is. Would you think it like that?
Yeah, so certainly travel outside of the EU will, for EU purposes, always be exempted. So the margin will always be non-taxable, regardless of the location of the customer. Then will it be 0%? So will it be standard rate in the country of the traveller's residence for non-EU tour operators? No. It would depend on the VAT treatment in place in the tour operator's own country. So there's no easy answer to that question, but it's not an issue for the EU rules at all, I think.
Right, okay. And just sweeping up back through it, in the case of place of supply, a non-EU supplier, sorry, it's a complicated question. In the case of place of supply, a non-EU supplier selling B2C to a non-EU customer, a service based in Germany, will not be required to apply German VAT?
So, okay. Oh, well, firstly, the options that we favour under the TOMS review would ensure that there's no VAT in Germany in that situation.
Can I just interrupt? Sorry, Dave, just to interrupt. There is VAT, but there's no VAT on the margin, or you don't charge VAT.
Well, on the margin, yes, but you still have margin, sorry, VAT included in your costs, certainly. But in terms of the need to declare and pay VAT on the margin, no. Under the options that we prefer, and which I think are quite likely, because the customer in this example is a non-EU person, there would be no VAT. But that's the position from 2025 or 2026, let's say. More immediately, what will the German position be next year? Well, of course, at the risk of repeating myself, we don't know, but the danger is that Germany would require the payment of VAT in that situation, simply because the service takes place in Germany. But this very recently rumoured concession that German VAT in the short term will only be payable if the customer is an EU resident person, would mean that in the example of the stated in the question, again, there would be no German VAT, but that's all supposition, I'm afraid, still at this stage.
Right, okay. And then, by the way, just the final question, or is this only one view of the EU review, but not the current view of Germany? The answer is yes. It's just one option that they're entertaining in this discussion document, and it is not the position of Germany next year. Nicole, Edenito, who's a distinguished journalist, has posed a question which she says we can be answered at the end, so we will answer it at the end. I've got someone saying, as a tour director supplying service to a company, would I be expected to pay the EU VAT even though my company is outside the EU? What an interesting question, David.
Is
I think
this?
you prefer a question on sport. Could we have a question on sport, please?
I'm trying to work out what the situation envisaged by that question is.
I think assuming that they are actually supplying I suppose the question is, the tour director is actually supplying services which are enjoyed in the EU, and they're based outside the EU, but the supply is in the EU. Should he be charging VAT? I think technically maybe he should be charging VAT if they are an independent contractor. It's not one I've actually come across before, but it's an interesting question. I think it's how can I phrase this? I think it's going to be it would normally fall below de minimis levels in each country that you're functioning, as long as you're working as a pan-European tour director. And I think it's an interesting issue. I would just float it. I've never considered tour directors' VAT exposure. And you posed something that the Brains Trust here.
I think. Sorry, I'm looking at the right question. I think the tour director would probably be entitled not to charge VAT, and the business paying for the tour director's services would probably be liable to pay the reverse charge locally.
Mm-hmm. Okay. I'll ponder on that one later. It's a good question.
Yeah.
Anonymous attendee.
So, you're breaking up a bit.
Questions before, sorry, two.
You're breaking up a bit there, Tom.
Why don't you handle those last? Okay, sorry.
Yeah. So okay, we've got a question on the deemed supplier regime. Which requirements would apply to the platform in terms of documenting that they got reassurance by the facility provider that the latter accounts for VAT, so the platform does not have to? Well, I think we will see the proposal in a few weeks' time. I'm sure it'll set this out, but I think it is likely that there will be a rebuttable presumption. So the presumption will be that the provider is not in a position to account for VAT unless the platform has clear evidence not only that the provider is VAT registered in the member state of supply, but also accounting for VAT. Precisely what form that evidence would take, I don't think is clear yet or known, but I would imagine the detailed proposals in a few weeks' time will cover that point. And there's a question on the meaning of platforms. I think this was the very first question. We worked our way backwards. Question is there a clear definition of platform? No, is the answer. We don't have the proposal yet, although I understand it is very unlikely that there will actually be a formal definition of platform in the proposal, quite deliberately, because the member states want flexibility. And they don't want the definition to be a hostage to fortune in becoming outdated as technology moves on. And if there was a clear definition that worked today, it may not work in 3 or 4 years' time. There are working definitions in some of the Commission papers, but they are just, they've got no legal force or effect at all. But essentially, I think the intention is that any entity or person that mediates online and introduces a provider of services or introduces a provider of services to a potential customer is a platform. So it's very wide.
Okay, I trust I'm not breaking up at the moment, David, but
No, you're fine now.
okay, we'll go to Nicole's question. It's asking if the Commission is considering a proposal that would essentially create a middleman between Germany and the non-EU tour operators. The short answer is no. I think the tour operators, certainly based in the United States, would, more than in theory, bear the liability of paying the German VAT due to the German tax authorities. And the other question you pose is, and did the Commission and ETOA work together to come up with the items that are likely to be included in the proposal? We did actually contribute to the study that is produced, but I wouldn't like to take too much credit for it. I think we will be issuing a submission in the next couple of days as to what we think the various proposals are, what we think about the various proposals which are outlined. I hope that's clear. And is that a fair enough comment, David?
Yeah, I think so. I mean, all I would add is that ETOA has been instrumental, I think, over the years, for 20 years, in informing the Commission on how things work, and what's a reasonable idea and what is not. And it's entirely possible that certain things would have been introduced many years ago that would have been detrimental if it hadn't been for the input of ETOA and indeed certain other organisations. ETOA certainly, along with many others, made a large contribution to the work of the economic contractors working during the course of this year. And I think ETOA can take quite a lot of credit for pushing forward the idea of taxation based on the place of residence of the customer as a suitable way of measuring up the need to achieve equality, but doing it in such a way that does not make the EU an unduly complex and compliance-heavy destination.
I will just zoom through the last couple of questions we've got here. Croatia has implemented its own rules requiring VAT to be paid on all packages in Croatia and not just on the margin. Do you know if this is likely to stay in the current form or may be subject to changes based on EU changes? I think the short answer is that at the moment it's not widely implemented. It's got a very, very narrow implementation window. They're mainly trying to target Serbian operators selling Croatian packages. And I've not heard of them saying they intend to enforce it elsewhere, but I may be wrong.
Well, I mean, Croatia has its own rules. But I think the question is saying, would it be subject to change based on EU changes? Yes, absolutely, it would be. So yeah. The current obligation to pay Croatian VAT in the way that currently exists would come to an end if the type of rules for the future of TOMS, as we discussed, are actually brought into operation.
And David, I'm going to ask you the last question, which is one close to my heart as an ex-tour director. What happens on optional excursions?
Talked about shore excursions. I think optional excursions would be the same. I don't know quite what the scenario that is envisaged there.
There are several different ones. I'm actually going to jump in and defer that, only because it has a much wider question surrounding optional excursions, and the tax liability on them is just one element of it.
Yes, yes.
And I think we've run way out of time on this. I'm really just going to close the discussion now. I think just to emphasize the points that I'm going to be making, or the principal points that I'm going to be making in reply to the taxation document that's been presented to you. I think the thing that we will be very keen to stress is that packaging tourism services is a service in itself, and it's distinct from the sum of the internal components. The product is manifestly distinct, and from its component, it is sold and branded as such. People don't buy a bundle of things as a bundle of things. They buy it as a tool with a specific operator, and who, in providing that service, undertakes all kinds of obligations and liabilities. And this is absolutely explicit within European legislation. The Package Travel Directive places onerous responsibilities on anyone packaging. And so packaging within Europe is a distinct, manifestly distinct service, which is enjoyed by the customer where that customer is based. And this is a point that we will be making, along with all the other points that lie in the background, quite emphatically in the next few days. But if you've got anything you wish to add to this, do write to us. You know where we live. And this discussion, I'm really very grateful to David. I'm very grateful to all of you who've posed so many questions. I don't think we regularly have quite so many questions at one of our webinars. I'm very grateful to all of you for attending. This will be posted, I believe, tomorrow. But a recording of this will be posted, and you'll be able to, I think you'll receive a link to that recording if you've registered to attend today. And we will also be posting the slides, David's slides, up on our website. So it's goodbye from me and David.
Thank you. Goodbye, everyone.
Goodbye. Take care.